Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 28th, 2026, and we're diving into Otis's fourth quarter and full year 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Otis has delivered a solid performance this quarter, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Otis reported net sales of $3.8 billion for the fourth quarter, a 3% increase from last year. John, can you elaborate on the factors driving this growth?
Absolutely. The growth was primarily driven by an 8% increase in service sales, with organic sales up 5%. This was partially offset by a decline in new equipment sales, particularly in China and the Americas. The adjusted EPS for the quarter was $1.03, which is an 11% increase, reflecting strong operational performance and favorable foreign exchange rates.
Operational efficiencies and future outlook. Otis has shown impressive operational efficiencies this quarter. Can you tell us more about the improvements in their operating profit margins and their outlook for 2026?
Otis's service operating profit margin increased by 100 basis points, driven by higher volumes and favorable pricing. Modernization orders were up 43%, indicating strong demand. Looking ahead, Otis expects adjusted EPS to grow in the mid to high single digits in 2026, with adjusted free cash flow projected between $1.6 and $1.7 billion, reflecting continued momentum from their service strategy.
CEO Strategic Insights. Judy Marks, the Chair, CEO, and President of Otis, provided some strategic insights in the report. What were the key highlights from her statements?
Judy Marks emphasized the strong performance driven by their service flywheel, with service sales growing 8% in the fourth quarter. She highlighted the company's balanced capital management strategy, which included $800 million in share repurchases and a continued increase in dividends. Marks expressed confidence in their strategy to drive meaningful returns for shareholders in 2026 and beyond.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.03 for the quarter. How did Otis's actual performance align with these expectations?
Otis met the analyst expectations with an adjusted EPS of $0.13, marking an 11% growth from the previous year. This alignment with forecasts reflects the company's strong operational execution and strategic focus on their service segment, which has been a key driver of their profitability.
Key takeaways. In summary, Otis has delivered a solid performance for the fourth quarter and full year 2025, with strong growth in their service segment and a positive outlook for 2026. John, any final thoughts on Otis as an investment prospect?
Otis's focus on service and modernization, along with their strategic capital management, positions them well for future growth. Their ability to meet EPS expectations and provide strong guidance for 2026 makes them an attractive investment opportunity.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Otis's performance in the comments below.